Welcome to Explain the Charts, your go-to channel for comprehensive market insights. Today, December 4th, 2025, we're putting Meta Platforms, ticker symbol Meta, under the microscope. The financial news is ablaze with a major development. Meta stock is surging, currently up over 3.5% and trading around $662, following reports that CEO Mark Zuckerberg plans significant budget cuts, potentially up to 30%, in the company's Metaverse division for 2026. This strategic pivot away from the underperforming Metaverse, which has incurred over $70 billion in losses since 2021, is being met with overwhelming enthusiasm from investors. Wall Street is clearly rewarding Meta for reallocating resources towards artificial intelligence projects and smart hardware initiatives, like the Ray-Ban smart glasses, signaling a clear shift in the company's long-term vision. This isn't just about cutting costs, it's about focusing on what the market perceives as the next dominant force in technology, AI. Meta has also committed over $600 billion through 2028 to expand its AI infrastructure, data centers, and workforce capabilities, further reinforcing this strategic direction. Other recent positive news includes the launch of an annualized dividend and a legal victory against FTC monopoly claims in November, though today's dramatic move is primarily tied to this Metaverse to AI pivot. Now, let's turn our attention to the charts to see how this news is impacting Meta's price action. Looking at the one-day chart, we can see Meta has experienced a strong overall bullish trend since mid-2024, climbing from the $480 range. Key resistance levels were previously found around $730 to $740, with the 52-week high reaching $796.25 in mid-August 2025. We also see solid support established around the $600 to $610 mark, which has held multiple times throughout the year. The candle for yesterday, December 3rd, 2025, closed at $639.60. However, today's news sent the stock soaring, with the open price for December 4th, 2025, registering a significant gap up at $676. This massive bullish gap is a direct reaction to the market's approval of Meta's new strategic direction, effectively creating a new short-term support zone at yesterday's close. The previous minor downtrend or consolidation leading into this news has been completely invalidated by this explosive move. We can anticipate today's daily candle to be a large green engulfing candle, reflecting the strong buying pressure. Now, let's zoom into the one-hour chart to examine the price action leading up to this point. This time frame captures a more granular view of trading from mid-November 2025. Here, we observe a period of consolidation and slight downward pressure, with prices fluctuating between roughly $581 and $603. Notice the resistance around $602 to $603 in mid-November, and support established around $581 to $583. The end of this particular one-hour chart data is November 21st, which means the recent daily rally we just discussed occurred after this data series concluded. This highlights just how impactful the recent news is, as it triggered a move far beyond the range seen in the latter half of November. Let's get even closer on the 15-minute chart, covering the very recent action from December 1st to early December 4th. This chart shows that prior to today's news-driven surge, Meta was trading in a relatively tight range, mostly between $638 and $648. We can see a brief dip to around $637.55 on December 3rd, but the price quickly recovered, showing some underlying strength even before the major announcement. The chart ends just after midnight UTC on December 4th, with a closing price of $640. The significant gap up to $676 at the market open, as reported in the news, would be represented by a massive void between these final 15-minute candles and the current trading range. This clearly indicates that the buying interest accumulated heavily during the pre-market hours, catapulting the stock much higher. The volume on these early December 15-minute candles also shows consistent trading, but nowhere near the explosion of activity that the news would have generated at the open today. Considering the current landscape, here's what to look for. The initial bullish sentiment stemming from the Metaverse budget cuts and AI pivot is a strong catalyst. For short-term bullish continuation, watch for Meta to hold above the $660 level, which acted as today's low. A move towards and sustained trading above today's high of $676.10 would indicate strong momentum and potentially challenge the $700 psychological resistance. The previous resistance zone around $730 to $740 will be the next significant test. Long-term, if Meta's AI investments bear fruit and show tangible results, breaking the 52-week high of $796.25 could initiate a new leg up towards $800 and beyond. Conversely, bearish sentiment could emerge if profit-taking ensues after this rapid ascent, pulling the price back towards the previous day's close of $639.60, which now acts as immediate support. A breakdown below $639.60 would suggest a fading of initial enthusiasm, with the next strong support at the $600 to $610 range. Any negative news regarding the effectiveness of their AI strategy, macroeconomic headwinds, or increased regulatory scrutiny on Meta's various platforms, such as WhatsApp's AI policies in the EU, could also trigger a reversal. The likelihood of continued bullish momentum in the short term is moderate to high, perhaps 70%, driven by the strong narrative shift and market re-rating of Meta's focus. However, the likelihood of a pullback for consolidation is also significant, around 30%, as initial euphoria often leads to profit-taking. For long-term bullishness to be reinforced, look for clear signs of successful AI product launches and positive financial reports demonstrating the benefits of reduced metaverse spending. On the bearish side, watch for any announcements that signal a slowdown in AI development or unexpected cost overruns in the AI infrastructure build-out. To recap, Meta is undergoing a significant strategic shift towards AI, abandoning some of its costly metaverse ambitions. This has led to a massive bullish gap up, creating a new immediate support level around yesterday's close of $639.60. Key resistance levels to watch are $676.10 and then the $700 to $740 range, before potentially rechallenging the 52-week high near $796. Support rests initially at $639.60, with stronger support around $600 to $610. Look for continued volume and sustained price action above today's open to confirm bullish continuation. However, increased volatility and potential pullbacks for retesting support levels should be expected. Always remember, this is not financial advice, and you should always conduct your own thorough research before making any investment decisions. Thank you for watching Explain the Charts, and we'll see you next time.